Today we're going to break down the absolutely wild story of Noah Kagan. He's an entrepreneur who openly calls himself a terrible investor, yet somehow he built $1 million Bitcoin portfolio. It's a journey filled with skepticism, a little bit of luck, and a strategy that is just surprisingly simple.
I'm a very terrible investor. I mean, that's a direct quote from the man himself, Noah Kagan. The founder of AppSumo, one of the first guys at Facebook. He's a brilliant entrepreneur for sure, but by his own admission, just not a natural at investing. So the big question is, how on earth did someone with that mindset become a crypto millionaire? Because, by early 2021, that's exactly what had happened. His Bitcoin holdings shot past the $1 million mark. And this massive gap between how he saw himself and what he actually achieved is what makes this story so fascinating. So let's get into how he did it. To really understand his success, we actually have to go all the way back to the beginning, a time when Noah wasn't just, uninterested in Bitcoin. He was actively against the whole idea. Just look at this timeline. It kind of hurts to read, right? Back in 2010, when Bitcoin was worth, 8 cents, he just waved it off as fake money. Fast forward to 2013, the price is in the hundreds, and he's still on the sidelines, literally making fun of his own CTO for buying it. He was missing out on a life-changing opportunity, and he didn't even know it.
So what finally changed his mind? Was it some brilliant insight into blockchain technology, a deep financial analysis? No, not even close. His entry into the world of crypto was a complete accident, and it all started with football.
You heard that right. In 2015, the streaming service he used for his favorite team suddenly announced they were only accepting Bitcoin. This small, almost random problem forced him to finally do the one thing he'd been avoiding for years: actually go out and buy and use this fake money.
And that hands-on experience was a total game changer. All of a sudden, it wasn't some abstract idea anymore. It clicked. He saw with his own eyes that, hey, people actually accept this for stuff. There's no bank in the middle. There's only ever going to be 21 million of them, kind of like digital gold. And it was secure. The fake money suddenly felt very, very real.
So after that first forced buy, he decided, okay, I'll put a little skin in the game. But he needed a method that would work for his terrible investor personality.
He ended up using a classic, time-tested strategy: dollar cost averaging, or DCA for short. The whole idea is super simple. Instead of trying to be a genius and predict the market's highs and lows, you just invest a fixed amount of money on a regular schedule, no matter what the price is doing. It just smooths out all the crazy bumps along the way.
And Noah's method was just beautifully simple. He set up an automatic purchase of $500 worth of Bitcoin every single month. The key word there is automatic. He said it and he forgot it. And by doing that, he took all the emotion, all the fear, all the greed completely out of the equation.
This right here might have been his secret weapon, his mindset. He wasn't trying to strike it rich overnight. He treated his crypto investment like a fun experiment, and he only used money he was totally okay with losing. This perspective is what let him stay cool when things got, really turbulent, which of course they did.
And this chart really drives home a key point. This was always a calculated risk. It wasn't some crazy all-in bet. His crypto was never more than 15% of his total wealth. The vast majority was safe and sound in things like real estate and stocks. So this chill, low-stress strategy was about to face the ultimate test: the absolute crypto roller coaster of 2017 and 2018.
So during that massive bull run in 2017, his small, steady monthly investments just exploded. At the very peak, his portfolio was worth an incredible $400,000. But as you probably know, what goes way up can come crashing way down. When the market absolutely tanked in 2018, his portfolio value plummeted all the way down to just 80 grand. It's an 80% loss from the peak. Just let that sink in. This is the exact moment where almost every other investor would panic, sell everything for a massive loss, and just swear off crypto forever. But Noah did it.
So why didn't he sell? It all goes back to that mindset. As he put it, I didn't sell because I never intended to sell in the first place. Remember, this was a long-term experiment, so he just kept his automatic monthly buys going. And because it was money he could afford to lose, he was able to hold on for dear life, and just ride out the storm.
So after riding out that insane storm and eventually watching his portfolio cross that $1 million line, what are the big lessons we can pull from his story? This is the question everybody asks him. But his answer isn't a simple yes or no. It's more about whether you are in the right financial spot to even think about it.
So instead of advice, he gives you a checklist. First things first, focus on your main income. Then build a solid foundation with safer stuff like stocks and real estate. Then, if you decide to jump into crypto, start with an amount you wouldn't miss. Use a steady strategy like DCA, and maybe most importantly, never, ever stop learning.
When you boil it all down, the most powerful lesson from Noah Kagan's story isn't really about getting rich. It's about the value of just participating. You don't have to bet the house on it, but just getting off the sidelines and actually engaging with new technology, even on a tiny scale, that's the best way to really understand it.
And that kind of leaves us with a final question to chew on. A decade ago, Bitcoin felt like fake money to a really smart guy. So what's the equivalent for us today? What's the revolutionary idea that we might be dismissing right now just because we don't quite get it yet?